Hello grade 10s, welcome back to another video. I am back again with an accounting video, and in this video we'll be doing income statement and the fixed asset note. So we're going to be doing this income statement for the year ended 28 February 2019. This is a common September test of 2019. Now we'll be required to prepare the income statement, or statement of comprehensive income is the same thing, or statement of profit and loss. So income statement has three names. It can be income statement, statement of comprehensive income, or statement of profit and loss. And you're going to calculate the missing figures in the tangible fixed asset note. And we have this information. We have the balance sheet section. This is the balance sheet section, grade 10s. And we have the nominal account. So the nominal accounts are the ones we're gonna be using to be doing the income statement. So with the nominal accounts, incomes are credited. So sales, it's credited. Everything that is on credit, we're gonna be writing it down as income. Sales, it's credited. Rent income, it's credited, which is this one is under other income. And then we also have commission income under other income, and then interest on fixed deposit is also other income. So you're gonna have 1, 2, 3 other incomes, and this one will be sales. And then for the debit side, it's all your expenses. You've got sales, debtors allowance, all of this that appear here, the numbers that appear here are going to be part of our expenses. So you know, as an expense, you will have advertising, packing material, bank charges, telephone, stationery, bad debts, insurance, salaries, and wages. And then this one and this one, this will be your cost of sales, right? So you will have sales minus debtors allowance. But if it's creditors allowance, I will show you how you do that differently. So let's see the additional information. Here is our additional information. Received a first and final dividend of 40 cents in every rent insolvent. So this is the adjustment for bad debts that I had shown you here, that they're part of your expense. So that is its adjustment. Telephone account, it appears there and it appears here as well. And then we have rent, which is income. There's an adjustment, and here is the rent income. And then we also have insurance. We have loan statement, insurance, provide for outstanding interest on fixed deposit. There was fire in the business, and then this one is for the insurance. And then stock on hand, we have trading stock and packing material. And also in our additional information, number 9, we have fixed tangible asset. Yes, then we'll be doing vehicle and equipment. Stay tuned, because I will be doing depreciation on this video. So if you are not good yet with depreciation, then stay tuned. So without wasting any more of your time, guys, let's get into this video. Okay, this is our income statement answer sheet. Yes, so when you get your answer sheet like this, everything, sales, cost of sales has been written, gross profit, operating income, this is your other operating income, gross operating income, operating expense, operating profit, interest income, profit before interest expense, and then net profit for the year. So anything that has to do with interest, fixed deposit, you're just gonna come here. If it's a loan, fixed deposit will come here, or investment. So let's get into it. So the first thing you have to do here is see your income. We have 1,792,840 as our sales amount. So the first thing you do, you write it down. 1,792,840, right? you are going to write that down. And then the next thing, cost of sales. You write it here as well. Cost of sales is 840,000. And then we have our debtors allowance. Yes, this is the 21,840 minus debtors allowance is minus 21,840. So guys, a debtors allowance is if people have bought on credit, and maybe we've given them allowance, right, for paying their debts early. Let's say you pay within 30 days, get a certain allowance, so you don't pay the full amount. So we just have to minus it from the total sales. These sales are credit and cash sales. So both credit and cash sales are here. And then we just leave it like that. You don't close this or put your amounts here in case, guys, there is an adjustment and you have to adjust your amount. So we don't calculate gross profit at the beginning. You just do sales minus cost of sales. You don't do that, because you will find out that when you do your adjustment, you still have other things you have not included. So rent, another amount that is appearing here, it's rent income. You're going to write it as rent income. And another one that is appearing this side is commission income. Wait, I forgot to write the amount for rent income. You have marks for these things, for these calculations here, so don't ever leave them out. For rent we have 66,800, and for commission income we have 30,620. So you can't do this, write this total here, because you don't know the adjustments and other things that are gonna come here. So for the fixed deposit, interest on fixed deposit, leave it like that. You will do it as interest income. It will come here. So you can write it here as 1,600, and then you'll just see how you have to adjust. And then after that, we have written all our incomes. So let's go to our expenses. Our expenses are on the debit side. So the first thing after debtors allowance, we have salaries and wages. I'm gonna put here salaries and wages. And after salaries and wages, we have insurance. After insurance, we have bad debts. We have stationery. If you haven't watched how I deal with all of this year-end adjustment, you can watch my video on my channel. Is up. It's called I think year-end adjustments. Yes, how you deal with every expense here. Stationery, and then we have telephone. We have bank charges. We have, no, not rent. I almost wrote rent income. We have parking materials. We have advertising. Yes, we have written everything, but I haven't written the amount. So let me just do that quickly. Yes, so I have included all the totals like this. This is how you do it, guys. That's the first thing you do when you get your additional your question paper. So you don't just write the totals, you will mess up everything. And then after that, you know your expenses, you know your income, you filled out everything. After filling out everything in this part, then you have to come to additional information. Received a first and final dividend of 40 cents in the rent from the insolvent estate of S. Phakathi, a debtor who owed 1,600. The remainder must be written off. No entry has yet been made. Received first and final dividend of 40 cents in the rand from the insolvent estate of S. Phakathi, a debtor who owed 1,600 rand. So basically what this is saying is that we had a debtor. A debtor is someone who owes the business money. And this debtor owed us 1,600 rand, right? And this debtor, S. Phakathi, can no longer pay, is insolvent. So he's paying everybody what they're able to pay. And for us, he can only pay 40 cents in rand from the insolvent of his estate. So he can only pay 40% of 1,600 rand. And the rest of the money that he cannot pay must be written off as irrecoverable, right? As bad debt. So we have a debtor. This person is not yet a bad debt, guys. So we have 1,600 times, or you can say 0.40. That is 640. This is how much this person has paid us. So we had 1,600 rand. In this 1,600 rand that he owed us, he could only pay 640. So let's see, 1,600 minus 640, we are left with 940. This 940 is a bad debt. So we are gonna go here and add 960. He cannot pay us this much. He can only afford to pay us 40 cents in the rand. 40 cents in the rand, which means it's 40% of this. Yes, so you will take this amount, do 0.40, or it can do 40%, and you will get the amount that he paid us. And the remainder, they say the remainder must be written off. No entry has been done yet. So it means it was not, when the entry has not been done, it is not included in this totals of the trial balance. So we have to include it. And now moving on to adjustment number 2, it says the telephone account for February 2019, 1,830 was still outstanding. All right, one thing I almost forgot, guys. Before we tackle that, we have to know our year end. So if they say the financial year ending on 28 February, it means the financial year starts exactly the following day. So we do not count leap year with February. When they say 28, you don't say, okay, maybe that year was a leap year. No, you don't. It ends on the 28th, is the end of the month. So the financial year starts, the new financial year starts tomorrow. So that will be the 1st of March 2019 will be the beginning of the next financial year, which means this one that we are currently doing, that ended in 28 February 2019, started on the 1st of March, and that was in 2018. So you can count March, April, May, June, July, August, September, November, December, March, April, May, June, July, August, September, October, November, December, January, and February. That's 12 months. So this is when the financial year started.